Last week, the stock market pulled back aggressively with Tesla and Google leading the markets towards the downside. Welcome back to another trading outlook where I go over exactly what to expect coming into next week. We have major earnings, we have FOMC, there's a lot of things to go over. I'm also going to be going over some of my main watches coming to next week. So with that being said, let's hop straight into my trading statistics for this month. As you can see, I'm up over $70,000 this month. Trade win percentage 75%, profit factor 8, 92% day win percentage with an average win loss ratio of 2.94. This month has been absolutely fantastic. I've been able to navigate the markets very well. If we scroll down here, as you can see, it's been a fairly slow month in terms of quantity of trades. A lot of it has just been 1 to 2 trades per day max, and we've been very selective with what we're taking in this market. Last week, I ended up making $19,000. Majority of the money was made on Friday, which was a Tesla short towards the downside post earnings. As you can see in the beginning of the week, there wasn't really too much going on in the markets. The markets were still inside of consolidation, so we had a lot more range and mean reversion trades. With that being said, let's hop straight into the economic calendar and what we have coming into this week. We do have consumer confidence that's going to be at 10 a.m. Eastern Standard Time, followed up by major FOMC statement that's going to be at 2 p.m. Eastern Standard Time on Wednesday. And of course, we have Fed Chair speaking at 2:30 p.m. Eastern Standard Time. On Thursday, we have advanced GDP along with the core PCE price index. And then later we do have the unemployment claims. On Friday, we have the unemployment cost index with, of course, the revised consumer sentiment. As you can see, next week, we do have an action-packed week in terms of the economic calendar. If we go into the earnings calendar as well, we have so many different big names reporting. On Monday, APLD, NVTS. We have Tuesday, before the market opens, PayPal, Boeing, Coca-Cola. After close on Tuesday, Bloomberg Energy, STX as solid memory name to keep an eye out for. We have Visa. We have a bunch of different other names reporting as well. On Wednesday, SoFi right in the morning. We have some of the Meg 7s. Microsoft and Meta. We also have Robinhood after close, ARM, Qualcomm, some more semiconductors along with Lam Research. And then on Thursday, we have MasterCard before market opens, Apple, Amazon. We have Roblox, Reddit, AXTI, a bunch of other big names to keep an eye out for coming into this week. Main days, Tuesday, Wednesday, and Thursday, we have a bunch of names that are going to be reporting, so make sure to keep an eye out for that. With that being said, now let's hop straight into the charts, starting off with, of course, the QQQ and the major indices along with the SPY. So as you can see last week, the SPY ended up pulling back a little bit versus the Qs, which ended up breaking underneath a key technical level support. Semis ended up holding up relative to the overall markets, but the tech names are definitely leading the markets lower. As you can see right here, on Friday, we ended up closing underneath our key technical level support with a daily candle close underneath. So next week, if we cannot reclaim back above that 690, this is a potential signal in the markets that we could definitely head a lot lower here. So for the Qs, as you can see, right into a key technical level support. The SPY is also breaking underneath a key technical level support here as well, which is at 740. And of course, for the semiconductors, we ended up breaking back underneath this 580. So now we're reclaiming / breaking back down. We could see a move all the way back down in towards that 540. Right now, we're on the daily time frame. As you can see, we do have that key level of support that I mentioned. If you go into the lower time frames here, we actually broke underneath a key level of support. What we have marked out is that 688. And as you can see, we're currently breaking underneath that 688 if we zoom in. Now, this is a sign for the markets to definitely show a lot more weakness now. We're underneath the key level of support. SPY, if we go on to the hourly time frame here as well, is also breaking underneath our key level of support, which is at 740. We did have some buyers that stepped in on Friday, but we ended up closing pretty weak on the day. Now, there's a possibility we could definitely see a bigger retracement here on the major indices. So coming into next week, what we're going to keep an eye on and the levels that we have marked out, let's put on the drawings here. For the QQQ, we have this 690 marked out. That is going to be the key level moving forward. That's the only level you should be paying attention to. If we maintain underneath 690, we are going to continue towards the downside. If we can reclaim, potentially we can see a bounce coming to next week. As for the SPY, high. The key levels that we have marked out is this 740, a rejection and hold underneath. We can definitely see a bigger retracement down in towards this 724, a reclaim. We can see a move back up in towards this gap fill that we have created. As for the semiconductors, the key levels that we have marked out is at 570. You can see we are breaking underneath that 570. We're breaking back below. We could definitely see a move back down in towards that 530. If we do want to see some upside, the reclaim back above that 570 is needed. Taking a look at DRAM here, which is the memory ETF, the exact level I want to see hold was our 55. You can see on Friday, weak candle closure back underneath this key level support. Now, this is a sign that we could definitely see this low that we created earlier from July. So as you can see, the overall markets are pulling back. It's a big earnings season coming up as well. So let's head straight on to some of the tech names that we have, starting off with Tesla. Tesla is making a brand new low for the year, breaking underneath its April lows. And now we're coming back into this period of consolidation, which is all the way back from July and April of 2025. We're also coming back into a key level of support. For Tesla wise, we actually haven't done too much within the past 5 years. As you can see, we are revisiting its 2021 highs on Tesla. And as you can see, last week we had a really weak candle closure towards the downside. The daily chart ended up breaking underneath key technical levels. And of course, we end up gapping down. Plus, we had continuation towards the downside. So we were able to capture the Tesla weakness lower. And now coming to next week, we're just going to be looking for more continuation towards the downside on Tesla. If we quickly go back onto the daily chart, we do have now room all the way back down into 300 and 280 on the higher time frames. As for AMD, AMD is still holding up, but as you can see, we are still rejecting off of our 560. Until we can break above the 560, we're going to be a little bit more patient. This is the exact level we need to break above. If we go on to the lower time frames, as you can see, we're more so still technically back inside this range. So for AMD, back above 560, that's going to be the break above. Right now, we're more so just ranging. NVIDIA, similar thesis here. Key levels that we have marked out is our 212. Need to back above our 212 if you want to see any sort of continuation higher. Right now, you can see we have a couple of rejections off this area, so we need it above our 212. Apple is one of the names that is, of course, leading the markets higher. You can see a lot of relative strength. We came back for the retest on Thursday. Nice buyer stepped in. And now you can see we're back at all-time highs. Apple is holding up the markets. If Apple does decide to pull back, the markets are going to continue lower. As for the key levels that we have marked out, we do have that all-time highs. Next levels is going to be above our 334. We can also keep an eye on a potential kind of cup and handle formation on Apple as well. The next higher low is going to be off that 330 for continuation. As for Google, this one also had earnings as well. We broke below that all-time highs, broke back underneath that 350. And of course, bearish earnings gap down here on the overall markets. We do have a couple gap fills that we can look to trade down in towards on Google based off the higher time frames. Moving forward, what we're just going to have marked out is that earnings low. And of course, we're going to mark out that earnings day high plus that earnings day low. If we want to see continuation, just maintain below key technical levels for, of course, continuation lower. The rest of the names, we have a bunch of earnings this week. For Microsoft, we are rejecting off this 400. This is the exact previous level of support that turned into resistance I talked about. And as you can see, we're now rejecting and continuing lower. If Microsoft gives up that 370, we could definitely see a push down in towards that 350 once again. As for Meta, rejection here, this one does have earnings this week as well. Pretty bearish week on on Meta. We broke underneath key technical levels. This was the area that we originally broke out from, broke back underneath, and now you can see we're pushing back towards the downside. Amazon, key levels that we have marked out is going to be our 226 on the higher time frames. We had a pretty big rejection here on Amazon. This one had this one does have earnings coming up. We'll see how this is affected by the overall markets. Some other names that we do have, Netflix, we're at a yearly low as well. We're breaking underneath key technical levels. Keep an eye on for Netflix. We are at a key level of support, but we need to see that reclaim back above our 74 if you want to see any sort of potential pushback towards the upside. SpaceX, this one's just going to end up continuing lower here as well. We're underneath key technical levels. As for a few other names to talk about, memory has been holding up, whereas the tech names have been leading the markets lower. So for something like MU, buyers did step in, offer 800. Now we like to see this inverse head and shoulders play out towards the upside. We like to see buyers step in exactly right off of our 980. So this is the exact level that we have marked out. For MU, what I'd like to see buyers step in off this 900, create this higher low. If we flip back underneath 900, that's a sign for a continuation lower. SNDK ended up rejecting off key levels. We're so far trying to build this kind of lower high here on this daily chart. So weakness has been set in on SNDK. INTC, of course, did have earnings. Pretty nice push higher, but as you can see, the day after earnings now down 7%. Pretty big swing. We went from being up 10%, now being down over 10% after earnings. For INTC, this one had bullish earnings, but of course, the overall market's having a negative reaction. As for INTC, the exact level that we do have marked out is going to be this 100 key psych. We reclaim, but we're breaking back underneath. So for INTC, flip back above is needed. So far with this weak candle closure, we're most likely going to see a bigger retracement here on Intel all the way back down in towards our 80 key psych. For WDC, a lot of these names are looking fairly similar. SK Hynix respecting these levels very nicely, which are IPO high and low. For the overall markets, as you can see, a lot of these names are pulling back, of course, with the major indices. So coming to next week, as we talked about, all we're going to be doing is looking for the QQQ. If the Qs breaks underneath here, right, there's a good sign we can have a bigger retracement in the markets. We have levels down in towards 670, right, 650, and all the way back down into this previous all-time highs. So for the Qs, right, if the Qs breaks underneath support, which we're currently doing on the daily time frame, we can see a bigger pullback. And of course, those high beta names are going to drop, right, 30 to 50% if the Qs pulls back 10%. So if the Qs pulls back over 20% or 15 to 20%, you can see how much those high beta names would drop as well. So with that being said, we're going to be a little bit more patient. We'll talk about this a little bit more in the pre-market preps. We'll take it day by day as well. With that being said, I hope you guys enjoyed this video. If you did, appreciate if you guys drop a like and sub. I'll see you guys all next week. Take care, everyone. Peace.